All right, let's go ahead and get this started. Let me go ahead and share my screen here. Doo-doo-doo. Today is August 11th, Monday, first day of the week. Well, actually, technically the second day, right? First day of the week is Sundays. But obviously, it's the starting of the work week. Let's go ahead and let's look at news, see what's going on in the week here. So this is the news for this week. We have a pre-booked week this week. We have CPI happening tomorrow, which is a very important indicator for inflation. Now they're predicting for a cut to happen this September to bring down the Fed rate, and they're going to cut it by 25 basis points. And the CPI, the Consumer Price Index, this will be an indicator to support that decision. Now, it measures a change in the price of goods and services be purchased by consumers, excluding food and energy. Now, we're looking at the year to year. Previously, it was at 2.7%. They're forecasting a 2.8%. So it might it might go up by 0.1%. And this is an indicator for the Fed rate, right? They're gonna base their decision based on CPI, based on PPI, job openings, and NFP. So they look at the overall news data to determine their decision on whether or not to cut rates. Now, an important indicator as well that the Fed especially they look at and they study is the core PCE. The core PCE is another indicator which is the primary inflation measure, right, for the Fed to look at. Now, the PCE is the producer, I'm sorry, the personal consumption expenditure, and it basically measures the consumer pricing and the consumer spending and so forth. So previously, the number year to year, year over year, it was at 2.68% for core PCE. Now, their target is to bring it down to 2%, right? That's the for the core PCE inflation, right? The goal is a 2% target rate. Now that's the Fed's rate goal is to bring down the the rate down to 2%. Right now is at 2.68. That's the PCE inflation rate is at 2.68. They want to bring it down to 2%. So it's over 2%, our 2% goal. Now, that is what they're looking at. And with unemployment rate being at 4.2% announced the beginning of this month, they announced the unemployment rate and the NFP. NFP came out to below expectations at 73,000 new jobs that were added in the month of July, which is below expectations. And the unemployment rate increased by 0.1%. Now is at 4.2%. And they paused the Fed rate. So it's between 4.25, 4.5%. And effectively, it's at 4.33%. So it's in between that range of 4.25, 4.5%, 4.33. That's the effective Fed rate. Now, so why do we have to know all these numbers? Why do we have to know what's happening in the news, what's happening in the economy? How does these numbers impact the markets, right? It goes hand in hand. So it's very important to keep this information in mind because this is going to be an important for it's going to be important for you to make an educated decision on whether or not to, buy or sell or hold or wait until you get it before you get into the markets. So I look at news. I'm a fundamental trader, so I like to look at fundamental analysis. I like to do my study. I like to do my research before entering the markets, and also it gives me a greater chance to potentially get some wins, right? Because I know the direction of the market, where it's going, how it's going to impact, whether or not to go in, when to get out. So whenever there's news events, it impacts the markets heavily, right? So for example, tomorrow we have CPI at 5:30 a.m. Arizona time. So that is 7:30 a.m. Central Time and 8:30 a.m. Eastern. So be on the lookout, right, on what's going to happen tomorrow for CPI. So you can also back test this. You can look, you can go on Forex Factory and you can look at all the dates, the previous dates that the CPI was announced. And CPI usually comes out every month in the middle of the month, the 13th, 15th of the month. So CPI, the results, the numbers comes out every single month. So you can look at last month. Last month, it happened on July 15th, and it resulted a 2.7% year over year. So you can go to the charts and back test what happened. And this is gold, by the way. I'm looking at gold, and you can back test this using any type of asset pair. I like to use gold. So I can go back to July 15th and see exactly what happened. You see, this is July 15th is somewhere around here. Right here. So we know around here. So it happened around 5:30 on July 15th. Let me go back here. Okay, here it is. Um, Here. So it resulted a bearish candle. So when CPI, when there's high inflation, high CPI numbers, then it's going to increase the dollar and it's going to decrease all the asset pairs. So it's an inverse relationship between the dollar and gold and other asset pairs that contain the USD, right? Such as your USD, USD JPY, gold, right? So all the all the asset pairs that contain the USD, the US dollar, is going to directly impact, right, on the direction of where that asset pair is going. For example, for gold, it resulted a bearish move. It resulted a bearish candle. I'm going to look at the 30-minute here, which means that it pushed gold down. It pushed the price of gold down and it pushed the price of dollar to the upside. So we can look at here, 5:30. This is CPI last month. It resulted a bearish momentum, a total of, looking at this candle, over 130 pips to the move to the downside. And after the news event, it came all the way down to this price level around 33.20. So we can see here, it resulted this bearish movement to the downside, and it touched all the way down to 33.20 and it shot back up again, right? So you can go ahead and back test these news events, and you can see that there's a pattern. So here for CPI last month, it resulted a bearish move to the downside. Can take away this. I like to use naked forex. I like to trade without indicators or barely enough indicators. I like to just trade based off price action, break of structure, and just naked forex. Naked, no, meaning no indicators, right? Trading without any indicators. I don't rely too heavy on indicators. It's a lagging way to do things. It lags. It's just like it overwhelms you. It confuses you, especially for beginners, for my traders that are in their first year, a couple months in. I highly recommend to trade without any indicators because it's going to help you a lot in your trading skill. I had to learn from experience. I had to learn the hard way. I used to trade with a bunch of indicators, and I would rely on indicators. I would rely on the indicators for my entries, for my exits. So when I started to trade without any indicators, it was a complete game changer. And you can actually see the price movement, the break of structure, price action, liquidity. Um, Basically following the 7 steps, the playbook that I showed you guys, is gonna definitely help you guys a lot. But anyways, so as you guys can see here, CPI resulted a bearish momentum, and we can look at the dollar, how you can also back test the dollar back in July 15th, and you can see that it also resulted a push up. You guys see here, July 15th. This was CPI last month. You see how it resulted a push up. And the big move happens after news. So you guys can see here on the dollar on CPI, it resulted, and I'm looking at the 15 minute, it resulted a bullish candle, right? A bullish candle here. It resulted a wick, like it was trying to decide where to go. And then after it pushed up, a big move to the upside. So you want to wait after news to trade. Because if you trade during news, it's you're gonna get confused and you don't know which direction the price is gonna go. So I wait after news to trade to take any trade entries, right? And I had to learn the hard way because I'll try to beat the news or time the market and enter for a buy or a sell, but then it goes the opposite way and I'll get liquidated, right? It's a liquidity sweep. Every time there's news events, you're looking for liquidity sweep. So the banks and the hedge funds, they come in and they liquidate all the retail traders, just like they did in this candle. You can look at this candle right here, right? This candle resulted a huge wick liquidating all these retail traders, all these investors, all these retail traders. They liquidated all these people, right? And then they think that, some people were thinking, oh, it's going to push down because we have this wick and then we have this bearish candle, right? It's going to push down. But guess what happened? It went up, right? So, and the fact that we have the numbers here that previously it was at 2.4%. The month before that was at 2.4. And then on July, it resulted at 2.7%. So inflation increased, right, by 0.3%. So inflation increased meaning that it impacts the dollar. It's going to raise the dollar and it's gonna decrease all the other assets. So you can also use the numbers to see, okay, whether it's gonna push the dollar or it's gonna push down the dollar or it's gonna push down the assets or it's gonna push up the assets. So you want to look at the dollar index. You want to look at and also the asset pairs like gold to give you an educated decision on what and which way the market's going to go, which way the price is going to go. So that's how you want to study news. That's how you want to do it, right? And the more you learn, the more you study this, the more you back test, you'll see these patterns. You'll see this, where the the impact on the price, right? So it's very, very important to know. You see how dollar went up, after CPI numbers came out, the dollar pushed up. And then with gold, it pushed the market down, going back to July 15th. Let's see where it's July. It pushed the market down here. So it's very, very important to study this. Now, tomorrow, right, they're forecasting 2.8%, right? So it's going to increase by zero point 0.1. If it goes up by 0.1%, then it's going to impact the dollar. The dollar will probably shoot up, right? We'll probably see the same move happening. And and the more evidence we gather, we can look at the gold. We can look at gold here, and we can see an imbalance here, right? We can see an imbalance right here. See, you can look at this imbalanced candle, and it's right now it's going down. It's trending down. It'll probably. Let me use the other chart actually. Let's see. Let me go back to this one. Since I have it marked up here, we have this imbalanced candle right here. Price is coming down to fill this gap. And I like to look at, the 50%, 75%, how much of the candle it will cover. So typically it likes to fill 50% of the candles or 75% of the candle. So when price comes down to fill the gap, it'll probably fill up 50% of it or 75% of it, and then before the move up. So I'm looking to see what will happen when price comes down to this quarter level at 33.25. You see I have every quarter level marked up. So I put a line here, a line here, a line here, a line here. So every quarter level I place a line, okay, to see because with gold, especially with gold, it's very sensitive when it comes down to these quarter price levels. So right now it's testing around 33.50 and it's breaking below 33.50. It was testing 33.50 as a support, but now it's breaking structure below for the retest, for the continuation to the downside. It may come down to test 33.25, and it's going to be interesting what's going to happen around this level. And since CPI is tomorrow, we may see a break of structure to the downside with gold. Because as I explained earlier, when inflation numbers increase, it's going to push the assets down and it's going to push the dollar up. All right. So if we see the numbers, the CPI number, going up. We see the dollar going up, and we may see the assets like gold pushing down, or it may push up for a liquidity sweep and then push down, right? But you want to wait until after news to trade. So we have this imbalance here, which is liquidity, and we may see the gold pushing down. It may test around the zone, around this price level. It may shoot up to liquidate and then shoot down. Or it may shoot down and then up. So remember, this is a game of probabilities. You want to gather as much evidence. And that is where the candle confirmation comes in. By following these steps, the playbook, we know the overall market direction right now is neutral. So it's consolidating, it's trying to figure out where to go. So looking at the 4 hour, we see this consolidation, right, happening. So we want to see a break of structure. We have the 1 hour supply and demand zones. So supply and demand is different from support and resistance. It is different from support resistance. Support and resistance are price levels, are specific price levels at where price reacts. Supply and demand are zones where there's potential buyers. And when price hits that zone, it's going to react. It's going to be, and it reacts based off imbalances, right? It's an imbalance. So whenever there's an imbalance, whenever there's order blocks, right, within that zone area, whether it's a supply or demand, that is where you want to target. That's how you can tell the difference between support, resistance, and supply and demand. So, and I can explain here. I marked up the zone here because this is a demand zone, right? We have an imbalance here. We have an imbalance here. So price could potentially come down to test the zone where there's buyers, demand, and it's gonna react. Okay. So it's an area of interest. It's a zone. Support is just a price level. It's just a price level. It's a specific price level where when price hits that level, it's gonna react. Okay, just like it happened right here. But you don't see any imbalances. All right. You don't see any type of, order block or an imbalance because market is just it's reacting. It's shooting, it's giving wicks, right? It's wicks here, just testing this price, and then now it's breaking below that price. And the more I go, I'll explain in more detail. But as of right now, we're just looking at, we're forecasting what's going to happen tomorrow. We're looking at news. Um, so so tomorrow's going to be interesting because it's going to be interesting tomorrow because it's gonna give you a sign uh whether or not the Fed is going to cut rates. And typically when there's high inflation, when there's high unemployment and all this data, it's a sign that, it's time to cut rates. Like, come on. Come on, Jerome Powell, like start cut the rates. It's time. It's been a year now since the last time you cut it, right? So it's time to cut the rates. People getting laid off, people are looking for jobs and companies are not really hiring because they're waiting for the Fed to cut the rates. They can't some companies can't afford the amount of employees that they have for payroll, right? Some companies are laying off employees, laying off people because they can't afford them anymore. They can't afford, the amount of employees under their payroll to pay, right? So they're laying off people because, they can't afford it unless they cut rates, unless they bring inflation down. So it's going to be interesting to see what's going to happen tomorrow. And also Thursday, we have unemployment claims. We have PPI. PPI is the Producer Price Index, the change in the price of finished goods and services sold by producers. This is a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. Now, this is also an indicator for uh, for price, for finished price in goods and services. Unemployment claims, it happens every Thursday with unemployment claims. They're forecasting 225, so it's going to bring down the amount of unemployment claims by over 1,000. Last week was at 226. So with this unemployment claim, the more people file for unemployment insurance, it's gonna weaken the dollar and it's gonna push up the assets, right? So for unemployment claims, we want a low number of the amount of unemployment. So the higher the number of unemployment claims, the weaker the dollar, because obviously it impacts the economy, right? The amount of unemployment, the amount of people getting laid off, of unemployment rate, and all that will impact the economy. So the higher of jobless claims, it's going to weaken the dollar, but it's going to push all the asset pairs to the upside. It's going to push gold up. It's going to push crypto up. So just keep in mind of that. Now we also have retail sales on Friday. Core retail sales is a change in the total value of sales at the retail level, excluding automobiles. It's the primary gauge of consumer spending, which accounts for the majority of overall economic activity. So this is for retail, and they're also doing consumer sentiment, inflation expectations. They do survey of about 420 consumers, which asks respondents to rate the relative level of current and future economic conditions by the University of Michigan. Now, here you'll have and also another indicator. It's a leading indicator of consumer spending, which accounts for a majority of overall economic activity. So you'll see people taking these surveys to predict sentiment in the market. So they're gonna base, you know, um, their information, their view on the economy, their opinions on this survey, and they're gonna collect all these surveys to for future economic conditions, for current and future economic conditions. Same thing with inflation expectations. So they take surveys of consumers, which ask them to see where do you see inflation going? Like what's your feeling on inflation? What's your the best word is what's your predicament on the inflation rate? What are your predictions and the Fed rate and consumer spending and all this. So they take surveys based on that information, and then based on the response, they're gonna see, they're gonna use that data for future uh analysis, future decisions. Now that's what we have this week. So next week I believe we have both FOMC meeting minutes. We have obviously unemployment claims. We have some Euro events. We have the Jackson Hole Symposium next week, which is the Federal Reserve Bank of Kansas City. They hold a symposium for the economic policy. So we'll cover that next week. But anyways, this week, CPI. CPI tomorrow. Be careful trading during news. Wait until after news or before news to trade. I wouldn't recommend for my beginners, for my intermediate, for people that are learning to trade, to not trade during news. Wait, be patient. Catch the move after news, like an hour, 2 hours after news, or even 30 minutes after news, you can catch a good trade entry, right? So, but do your research, follow your trading plan. I follow the playbook. I follow my trading plan, which is a playbook. This is the 7 steps you can use to give you a direction on what to do before entering the market. And you can use this for any type of market pair and for any asset pair. Doesn't matter the market. You can use it for uh, crypto. You can use it for Forex. You can use it for gold. You can use it for indices. You can use this for any market. And it works beautifully with gold, especially with gold. It works beautifully with gold. Now, so you first step, you look at the 4 hour market direction. Second step, 1 hour supply and demand zones. Third step, liquidity. Fourth step, break of structure and retest. Fifth step, confirmation candle. Sixth step, look at time. Seventh step, execute on the 50-minute time frame. Now, I did mention before that I'm going to be creating a boot camp going over the playbook. I'll be creating a video for each step covering the playbook and how to use it, how to implement it. So I'll create a boot camp series going over that for you guys to look at. And but as of right now, I'm just reading on what's happening this week. And I'm going to refresh this. So we can look at this article here. It gives you a quick breakdown of what's happening this week. We just talked about it. Consumer Price Index, CPI, happening tomorrow. We have some Federal Reserve officials speaking. We have Richmond Federal President Barkin speaking tomorrow as well. We have some key earnings for several companies like Circle, Internet Group, Canva Group, CoreWeave. We have some earning reports coming out as well. That's gonna, boost the stock market, especially in the tech field. We have some, let me see here. We also have some officials speaking from the Chicago Federal Reserve. Thursday, we have unemployment claims, producer price index for July. Friday, we have US retail sales for July, and we have consumer sentiment. And that the consumer sentiment is the surveys that I just talked about different people taking surveys for consumer sentiment and inflation expectations. So we have that on Friday. It's a lagging indicator, um, letting people know, their view on inflation, their view on the federal rate, and their view on the economy. So they take these surveys to predict that, right? So that's happening on Friday as well by the University of Michigan. They do those surveys. Now, um, I like to use Investopedia for my news. I like to look at articles, read through it, and give you some key takeaways. So as you guys can see here, inflation will be in the spotlight this week with fresh data due that could influence Federal Reserve's officials' stance on interest rate cuts. So we can also look at the CME Fed Watch tool here. Last time I checked was at around this percentage, 85, 86%. It was at 90% at one time, and then it dropped down by, 80 by it dropped down to 86%. No, there's a 86.5% chance that they're gonna cut the rates coming September. And at 13.5%, that's gonna remain the same. But I do see them cutting. Uh, Excuse me. I do see them cutting rates by 25 basis points on September 17th. And because it's time to cut. Like it's been over a year now, so Jerome Powell, it's time to cut the rate at least by 25 basis points. Um, so that way we can start seeing some action. We can start seeing a bullish run in crypto. When there's a Fed rate cut or anything like that, it's gonna boost the crypto. It's gonna boost the crypto market. It's gonna boost the asset pairs. It's good for the asset pairs, but it sucks for the dollar. It's gonna weaken the dollar, and the value of the dollar is going down anyways. The value of the dollar is losing value over time, and it's time, like, all these companies and the government's investing billions of dollars into crypto. So, crypto and AI is taking over. They don't care about the dollar anymore. They now they're implementing stable coins and USDC, in banks, and there's gonna be regulation on that. So, it's gonna be a good run for crypto. So for my people, for my crypto people, um, hold on to your assets. Do not sell, because it's gonna be the future is bright for crypto. And I invest into crypto myself. And But at the end of the day, do your own research when it comes down to crypto. I like to use CoinGecko as a tool to do my crypto research. I like to come on here and go to coingecko.com and put in dark mode. And this is where I do all my crypto research. And you can click on a crypto pair, a crypto asset, and you can read through it. You can look at the price right now. You can look at the background, the history about Bitcoin, who created Bitcoin, how does Bitcoin work, Bitcoin mining. So it gives you, answers on the questions that you might have, and also external links, external resources, and yeah. So Bitcoin right now is at 120, which is it's crazy. 2 years ago was at 15,000, and it went up 10x. It's crazy. But yeah, crypto. the future of crypto is bright. We see Ethereum just hit 4,000 a couple days ago. That's over 4,000 now. XRP is up there. Solana, Chainlink is another good one. And there's an, I have some Uniswap. I have like 8 Uniswaps in my portfolio, and I just hope Uniswap they come up with a some new projects, some more utility, because that's gonna push the price when there's more utility usage for Uniswap, and so if Ethereum goes up, Uniswap goes up. It's under the Ethereum network. But yeah, you can look at all the crypto here. You can do your research. There's over 18,000 coins, guys. There's over 18,000 crypto coins in over 1,339 different exchanges. The market cap is $4.07 trillion dollars. So I was actually looking at this earlier as well, looking at infinite market cap. You can look at the top asset pairs um, based on market cap. Gold is number one in market cap. It's at $22.8 trillion dollars in market cap. Gold is gonna say at number one. Gold is gonna be, gold is a tangible asset. It's a precious metal. It's needed. It's useful. It's a medium of exchange. It's gonna last. So I'm a huge supporter in gold. And this is just my opinion. Like gold is going to remain at number one, regardless. And that's just my opinion because gold is needed, right? Especially anything that's tangible, it's needed and useful. Despite of us living in a digital era, we also need something tangible, right? Something in our hands that is valuable that we can store in a vault or something. So gold is one of those precious metals. Also silver. I have 1 ounce of silver that I'm currently holding, and I'm holding that right now. I'm getting more because I know gold and silver right now is at the number 8 spot, 2.1 trillion dollar market cap, and it's undervalued, right? That's at $37 per ounce. Like it's undervalued, it should be worth more, but I do believe that it's gonna 10x, very soon. So that is why I'm holding it. But yeah, gold is good, silver is good. We have Nvidia number two, we have Apple number four, Bitcoin is at number six. It surpassed Amazon, and market cap is at 2.3 trillion in market cap. We have Tesla 15. I saw Ethereum here. So yeah, we have Ethereum here at number 27 and market cap of 505 billion. So yeah, I like to use infinite market cap to look at the top asset pairs of market cap. So this is my resource to go. Anyways, but yeah, keep doing your study, guys. Keep looking at this, study the news. And back test the news, look at the previous data. By looking at Forex Factory, you can click on the folder where it says detail. It will give you the previous numbers, and you can study month by month where the numbers were at, and you can go back to the markets and back test that, just like I showed you guys earlier, and know the different correlation, the different, ways where the market moves. But yeah, right now gold is testing around this area, 3350. It just shot up again to 3350. Um, I like to look at the 4 hour because it gives me more data, more information. We see this wick here. It's just liquidity wiping out, all these buyers here. But I do see it pushing down, and we see another bearish candle, another 4 hour bearish candle, then it's definitely going to continue down. But if we see a bullish candle on the 4 hour, it may push up. But we'll see. We'll see what happens. We still have more events happening this week, especially tomorrow. We have CPI. So CPI news happening tomorrow could influence on where the price is going to go. So, but yeah, guys, I appreciate you guys for listening in. Mondays is just a quick overview of, what's happening this week and, you know, doing some fundamental analysis um, there's two different types of traders. There's the fundamental analysis traders, and then we have the technical analysis trader. We have the technical, we have the fundamentals, right? So I like to use both. I like to have a blend of both fundamental and technical. But lately I've been focusing on fundamentals. I've been focusing a lot on fundamentals and studying news and really understanding the view, having a better view of the economy. I like to do my research and my own study and how these numbers, how these news influence the price, right? Because at the end of the day, it's all manipulation. It's all being controlled. So I go to the source. I go to where what's making these price to move this way, right? Like, it's a psychology of the market, right? It's just a bunch of buyers, a bunch of sellers, institutional traders, um, fear, greed. It's a psychology of the market. So looking at news, looking at these events, these numbers, the headlines, if it's positive words, if it's negative words, if it's, this more into just, looking at it's more into just looking at news and reading the news articles. Bigger than that. It's really understanding, the psychology of, of these of the economy of the people, right? Because this is all being the movement of markets is just is based on the psychology of people and the emotions and there's also some artificial intelligence integrated into that as well, which is insane, right? But that goes to show that all this is just a game of manipulation, right? And you don't want to rush into this. You don't want to rush into you know trading and getting profits and chasing the bag. Like, I get it. Like, you can make a lot of money in the market. You can make a lot of money in the field. You know, I've made a lot of money and I lost a lot of money, right? But the number doesn't matter. The dollar amount doesn't matter. It does not matter at the end of the day if you don't know exactly what's going on, right? It does not matter how much you made. It's not matter how much you lost. It's just a dollar amount. Like, the money, the money has to keep flowing. The money has to move, right? From your pocket to somebody else's pocket, or from their pocket to our pockets. It's an exchange of currency. It's an exchange. So money always has to move, right? So when you realize that the market is all manipulation and you know that the money has to keep moving and learn how to detach yourself from the outcome, learn how to detach yourself from the money. Like, it's an illusion. Like, money, the dollar is it's an illusion. So do not have an emotional attachment to the money. Basically, you gotta operate like a robot. Like, you gotta operate like no emotions attached, no strings attached, no, if you win, okay, good. What's next? If you lose, okay, you know, what's next? I'll do better next time. But like, it's a learning experience. Like, Whether you lose or whether you win, do not react. Like it's okay. Okay, you win. Then what? What you're gonna do? Like how are you gonna protect your assets? How are you gonna protect that? Where are you gonna move it? What's your next game plan? So you gotta think 10 steps ahead, right? Than most people, than the average trader and than the average trader. Don't be an average retail trader. Like you don't want to be an average person when it comes down to this. You want to think different. You want to operate different, right? So and keep it simple. Just keep it simple. Like this skill set, it's a skill set that you'll keep for the rest of your life. If you really want to bad enough, if you really want to win and you want to treat this like a profession, then act like it, like become that person now. Start acting that way, start thinking that way, start to operate that way. What are your daily habits? What's your pre uh trading routine? What's your post trading routine? Right? So all that also plays a huge role. Your morning routine, your daily habits, your mindset, the books that you're reading, educating yourself, back testing, learning, it's a repetition. You got to make it a habit. It's a lifestyle, right? So then act like it. Be about it. Don't just talk about it. And I'm sharing this based off experience. Like I have over 5 years of experience and I'm still learning to this day, right? And I made tons of mistakes. I've taken many losses. I've had some milestones, I've had some wins, right? But there's always for improvement. There's always, you know, you always want to continue growing, always. And I have mentors that I study from, and I'm still a student, and I learn best by teaching as well. Like I came to realize that, when you teach something that you know and it's working for you, by sharing it, you also get to learn. So it's it's an ongoing process. It's an ongoing journey. And I'm just grateful that I get to, use YouTube as a platform to share the skill set that has impacted my life and that has helped me, you know. Um, Trading has been a skill set that I've used to, um, to pay for groceries, to pay for gas, to pay for a bill or whatever, like I've been able to withdraw profits from trading, you know, without working a job or without relying on somebody else, right? This is a skill set that's very powerful and it can help you, you know. Um, but you also want to think long term, like the situation that you're at right now, your current situation does not matter. Um, as long as you have that vision, you know where you're going, and you can use trading as one of the vehicles to take you there, right? Trading is not everything. Trading is not the end all be all. It's a skill set. It's a good skill set to learn, but it's just one of the vehicles. You can use trading as leverage to make extra money, and then you can use that money to reinvest into something else or to transfer that money to another business venture, right? So it's just one of the vehicles. It's not an end all be all. So you don't want to take the skill set like you don't want to use trading for something to rely on to pay for bills or as your only source of income. Like trading is just one of the vehicles. So um don't be so like don't be a trading junkie, like You see, like you know those drug addicts, those people that are like so addicted to drugs and you know cocaine and oh man, I want some more. You got some more cocaine? Like they're scratching their neck and they're like you're just addicted, right? It's unfortunate, to see those people that way. It's like, but they're doing it to themselves, like they made their own decision, so like, but you don't want to be that person too, like when it comes down to trading, like, oh man, when is the next trading buy? When is the next buy? When is the next sell? Oh, where, you know, like I gotta earn money today. I gotta make the money today. I gotta get the profits today. You know what I'm saying? Like, don't be that person. Don't be a trading junkie, like so addicted to trading to the point where like you 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 have to trade. Like you have to win. You have to, trade every day, be on the markets all day, every day, 24/7, no sleep. Like, no, bro, like that's actually bad for you. Like like yo, you gotta find a rhythm, like create a schedule for yourself. Find that rhythm that what works for you. I don't be on the markets all day. Like I don't like on Sundays, I'm barely on the markets. Like I take time. Like Sundays are my Sabbath days. I barely look at the markets. You know, I don't even focus on that. I don't take trades on Sundays or Mondays. Like today, I just look at news and I look at the markets. I just glance at it. I look at this. I do these calls and that's it. I don't take any trades and I don't take any trade executions. I'm not forcing myself to rush into a trade or to enter a trade. Like, no, I used to do that before, but I had to learn the hard way, and I took lessons out of it too. Like I took some losses from doing that. Like, no, it did not help you. It did not help me at all. Um, so it's good to train your eyes. It's good to, look at price levels and look at the patterns. It's good to train your eyes. But you also want to build that discipline where you're just training your eyes, but you with the knowledge of not entering for a trade, you gotta control yourself. You gotta have self-control. Like, hey, like I'm not Mondays, I don't trade. I'm not putting a trade execution. I'm just training my eyes. I'm just learning. Mondays are the days of just educating myself. and looking at news. And every day you're educating yourself, right? But like think of it that way. Like, Sundays, I do my Sabbath. Mondays are market overview, news, looking at price, um, without taking any trades. And then Tuesdays, Wednesdays, and Thursdays, the middle of the week, those are my trading days. However, it does not mean I take a trade every single time. Like, I want you guys to understand that. It does not mean that, hey, it's Tuesday. Okay, I have to enter. I have to enter for a trade. I have to enter that buy. I have to enter that sell. No, I follow my plan and I see for an opportunity. I let the trade come to me. Let the trade come to you. Do not force it. Do not force an entry. Let the trade come to you. So you want to be in that flow state, like, hey, the trade is coming to me. I'm not chasing it. I'm not chasing after it. It's coming to me, right? So whenever and prior to that, I have my setup already marked up, you know? So for example, here I have my setups marked up. Like I know, okay, if it hits this supply, demand zone, okay, let's see what's gonna happen. So and I look at and I gather my confirmations. I follow the playbook. And when I see an opportunity, okay, I'll take it. If there's confluence, if I gather as much evidence and there's confluence, then I'll take it with a proper risk to reward. Risking 1% to gain 3% risk to reward. Okay, so knowing your risk management plan is also important because it's not just about entering the trade, but also knowing when to exit. the trade, right? When to take profits, when to exit. That is also a strategy to have, right? So so let the opportunity come to you. Do not chase after it. Do not force yourself. Let the opportunity come to you. And whenever you see it, when there's an opportunity and you gather as much confluence, as much data, okay, you enter the trade. If not, no harm, no foul. Just wait till the next opportunity. There's many, many opportunities to come. Okay. There's trillions and trillions of dollars circulating in the markets right now, and there's always another opportunity that's coming. Okay. So just because you didn't take a trade does not mean you're far behind or does not mean that you missed out. Do not have FOMO, fear of missing out, right? And like I said, it's all mindset. It's a psychology in the markets. Do not be greedy. Do not feel FOMO. Do not, you know, force yourself. Do not pressure yourself. Like it's okay. Relax. It's not the end of the world. Like there's many opportunities ahead. If an opportunity does not happen in Tuesday, okay, you have Wednesday. Wednesday. Let's see what happens. You might take a trade Wednesday. Good. Maybe Wednesday the price will hit your 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 zone. It'll hit the confirmation. So maybe Wednesday you'll take in a trade. If not Wednesday, then maybe Thursday. Maybe price will go down enough or up or to that price level and you'll gather confluence, then that's when you take the trade. If not Thursday, okay, maybe Friday, right? Friday, sometimes we have news, right? Like this Friday, we have news. Um, we might see some action going on Friday. So Friday, if Tuesday, Wednesday, Thursday, you did not take any trades, okay, maybe Friday, depending on market conditions. Let's see. And I don't take trades on Fridays. It all depends on market conditions, but sometimes Fridays, you'll catch some moves on Fridays, right? So Fridays, if price hits your mark, then take it. If not, it's okay. Wait till next week, right? So you want to have that rhythm, that flow, that you want to maintain that composure, right? And um and I rather take a um I rather educate myself and to prevent a loss from happening. I rather miss out on a trade than lose a trade. You guys understand that? Like I rather miss out on a trade opportunity than lose any money, right? Than lose my profits and lose anything, right? So it's okay if you missed out. It's okay if you missed out on a you know on a trade because it actually prevented you from losing any money. You did not lose anything. You did not lose any money. So it's okay that you missed out. At least you didn't lose anything. So but you also take that as an opportunity to educate yourself, right? What happened? Like did you wait too long? You know, did you not gather enough data, enough confluence, So like you're always learning. You're always refining your strategy, you're always refining your approach to the markets. So it's okay. Just wait for the next one, right? Let it come to you. And but yeah, that's all I wanted to say and cover some mindset tips, some experience, and but yeah, guys, I appreciate you guys for listening in and I'll see you guys on Wednesday for Chart Work Wednesdays. Please like and subscribe and share this with anyone that will benefit, that's looking into trading, investing, that wants to learn the skill set and wants to improve, wants to, become better and do better, and grow their cash flow. And trading is one of the vehicles to do that. But anyways, I love you guys. I appreciate you guys, and I'll see you guys on Wednesday. God bless.